Hello everyone. How is it hanging? It is Friday the 13th. I've just actually realised that there. Unlucky for some. Let me know if you're still chilling, what you're doing, how your session's been. Let me Chrome. I'm just going to do this ever so quickly here. And then share this and pop it on the Discord. Let's do the thing. Into here. And then announcements. At everyone going to, well, I'm live. Let's do that. For Friday close of session. See if I can, for close of the session. Is there anything wrong with this? Okay, that's fine. There we go. Okay, you guys now have my undivided attention. Borta, how's it going, dude? What's happening with you, mates? How's your sesh? Before I continue on, how is the mic situation this evening? Is the mic okay? Should I give like a little testing, test 1, 2? Hopefully it is, because I did not changed anything. Max, what's happening? We'll chillax and watch a bit of Treasuries. It's just been an absolute dump for the whole week. We're extremely negative delta on the 10-year, like 32k, so we may get a bit of a close in the next hour. We'll see. Mic is working. Nice. So it's good you guys can hear me. That's awesome. It was a bit ropey the other day, right? I think I had to change. It was almost defaulting to the wrong device. So it should be sorted now. Which is good. So we can see yields. Yields are just been going to the moon. Really strange though, considering the Fed is cutting. It's like an 85% probability of a cut happening, yet the market is not giving a shit. So the market is basically saying the Fed is wrong, which the Fed is normally wrong, to be honest. So not that the market gets it right all the time either, but they're normally more reliable than the Fed. So Jagger might be joining us later. He's just grabbing a bite to eat, and then he'll jump in so we can not have such a boring stream, seeing as it'll be Friday. So let me know how your session's been. How did it go? What's all been happening? Robbie boy, how's it going? Yeah, Mike's better now, dude. I think I had the wrong device or something attached, but it seems to be sorted now, man. Which is awesome. An absolute straight dump in treasuries this week, Rob. If you've been checking it at all, just one-way train stuff. Complete one time framing across the whole curve today. We should maybe see a little bit of a close off in the delta today. ZB's been absorbed as well. It's pretty flat on delta for the session, which is quite surprising considering the 10-year is negative 32k. Bruno, what's happening? What would I look for in an entry on the Dom? Jeez, mate, where do I start with that? Um, I would say the context for me is more important than just the entry. So, if it's data-driven days, where there's some tier one data points coming out, and market needs to reprice a lot, I'm probably going to go with the data that day. So you need to have an understanding of the flows that are happening. So that gives me not sort of the bias, but it just keeps me out of trouble on data driven days. Um, if it's a Monday or Tuesday, typically I'll just be looking to fade back into the mean. Look for some absorption at specific levels, and ideally, if I'm to fade back to the mean, I want certain parts of the curve to also already be in a range. Like for example, today has just been completely down, so not been the easiest action to be honest. Now we can see the algo is just turned on, so we're going to be relatively capped. I wouldn't be surprised if we take a bid back up and maybe challenge the S2 pivot here. Yeah, it's hard to say what entries to look for. It's not a specific criteria. It's very much of just what's happening for the session, what's delta, are we too extended? I mean, there's so many things. It's not a mechanical system. If it was mechanical, I would pay some guy in a basement to code it for me and go to the beach. But sadly, the edge you build up over years is you doing the thing for many years. So like right now, for example, we're seeing the market's pulled up off the lows, right? We want to see something like the 5-year challenge this level and go first. And this is not great, but they're lifting 26 into the offer and there's only 800 odd here. If they backtick and just pull this bid and then go off it again, they need to start challenging this with a bit of size. I mean, 26 is not going to cut the mustard. Same here. It's basically the same setup is happening on here and on here. They need to actually thicken this bid up, challenge into the offer, need to do some size. But there's not that much volume. I mean, it's Friday afternoon. It's not like we can expect the world to go on fire right now. It's not like we're going to go way back up here anymore. Yes, Rob left some absolute nuggets for the team, to be honest. So what you're seeing is due to Robbie Boy here, an absolute pain in the arse to set up, but it's the sneakiest way to get the yield data. Um, to be honest, sneakiest way, and it's like 100% inverse, so you can spot sometimes there's a slight arb that happens, or you need to really be zoned in. It's not something you could stream and pay attention because you need to constantly You need to constantly be watching the 5, 10, and well, I've got the 20 and 30, but the 30 is more for the extreme long end for the UB. So I use these both in tandem for the long end, but you know, you need to be paying attention to what these are, and then of course you're just watching your standard stuff in the DOM, but fairly straightforward. But it's good you had to play around with it, Max. Exactly. Jagger's now switched to treasuries, which is awesome. See, as we were saying for the bid there, the bid is basically pooled, and then we've then ticked down only 680 traded. Then if it went offered, and uh, they're now back ticking into here. So in order for us to at least break and challenge this, you're gonna need to see yields are probably going to tick down to like 69, 68 in order to try and challenge here. And you need to see them actually lift some size in, like, clearing this offer, going bid, and then lifting into the offer is. You need to lift some size. Like 20 contracts is not going to cut the mustard. So, like this, they've cleared, most likely the two-way trade here, faff around, but you need to see them actually lift in here with some size in the tens. And we have ticked down to 69, so we want to see this probably go 68, 67s to challenge into this. Same as the 5 year, this is thickened up a little bit, so you want to see that, crack. Which one's going to go first? CB is lagging behind ever so slightly. They're aggressively absorbing on this price with a little icy. Yeah, it's not. I mean, you can get the uh no, is it you need to go to like the CBOE to get it, and then even then I think it's just the yield data you get is like micros or something, which is useless. Honestly, who is trading micro yields? I mean, seriously, who come up with that at the CME? Let's put in the micro yields. I mean, am I missing something? Who's trading that? So let me know how everyone's session's been. Did you trade today? How was your week? Did you make any Benjis? Please enlighten me, because this is going to be a long, a long couple hours if we stay in a two-tick range, guys. So please ask some questions. Cash bag for bonds, right? Of course. What size do you trade on average per trade, and what's your average profit range in points? So for me, it depends. I like to be somewhere in the tune of 3 to 4 ZB, or it depends on what I'm looking to do with the 10 year or the Ultra 10s, but somewhere between the 6 to 10 mark is typically what I'm going for, mate. And I am relatively modest in what I go for range and points. I mean, I never take a point. Well, that's not true. On occasion, I do. See, we've ticked down to 67s here, so this can break. We need to see the fives press in here. We want to see this tick down and fives press into the offer. If they do, we might see this clear. And you notice how the yields have ticked down. This bid is a bit thicker, but we want to see someone grab the balls and basically tick up into this price. And note the 1972. You want to see them take this, and when they actually hit, say, a couple hundred contracts up here, you want to see this cancel. There is some two-way at the moment. No one pressed in. Note the 67s. If we do pop down more in yields, then likely this will take. The 30 years also ticked up a little bit. UB is lagging ever so slightly. Back to 69s. Alex, howdy, nice setup. I know an older trader that's been in the markets for 50 years that uses the yields like you to trade the treasuries. I like the box better than having charts up. Yeah, exactly. I just always have the charts, but this is, you know, this is much nicer. Right, the 5 year needs to do something here. They're both at 67 basis points, so someone's going to need to do something here, or if they don't, we're basically back. They keep on flirting with 69s here, and the more they do that, the more this is just going to clear and go offered again, and then we're back into the same scenario. Does someone need to do something? But it's fantastic watching because it's 100% inverse of each other, so it's very important. And of course we have the safe havens over to the left. We've got the yen and the Swissy, which the correlation has dropped a little bit on that recently on the Swissy, but the yen's still playing pretty strong. Typically when money flows into the yen and the Swiss franc, they're positively correlated to treasuries, so again, because they're all safe havens. So it's just nice to know. Also, it gives you a rough idea of how the dollar's doing as well. So a strong dollar also means weaker treasuries. And again, back to the whole point of context, everything in the market is linked and correlated. So if you don't know your correlations, um, I mean, learn them. You're seriously doing yourself a disjustice if you don't understand correlations. It's like the equivalent of going to McDonald's for a salad or going to the pub and having a Diet Coke, not knowing your correlations. I can't. It's the only analogy I can think of. But that's the way I see it. Matty boy, how's it going? Do I use an OCO order? Yes. How many ticks are you looking for? With treasuries, emergency stopperoo. Recently switched from ES and loving the read on OrderFlow, but not sure with OCO. Okay, basically, before you get in the trades, you need to decide: are you going to take, three, four ticks out of this? Or are you going to run it? Or are you going to not? So you need to make that decision first before you decide what you're going to do, right? Because doing it while you've got money on the line, you'll just butcher it and make all the wrong decisions. So I feel like I say this all the time, but context. If it's a Monday, right, um, in the roll, I'm certainly not. That's not going to go 4 or 5 ticks. So I'll take literally one or two ticks, most likely one. If the market's in a 20 tick range for the day, I would just scamp. I'll just scalp all day for one or two ticks continuously. We've now ticked up to 71s. The buyers have shit the bed, and we're not breaking to the upside. C'est la vie. Whereas if I was looking to the market to break, it would need to be most likely a directional day, and ideally I would want there to be decent flows coming into the market, i.e. some tier 1 data that's probably going to reprice the market. So you need, I feel like I say this every single time, but you really, really need to be aware of what data is coming out. Is it a higher volume day than not? Are we in a directional market for that session? What is the overall uh, curve doing for that session? How are the correlations? How is ES? How are safe havens? All of that plays into your decision if you're going to be taking one or two ticks or looking to take 6 to 8. And that's the biggest skill set you're ever going to learn as a trader, ever. Because very, very typically, when you first start out, you learn something and you walk into the market every day ready to fire and expect to make money every day. Sadly, it doesn't work like that. And your biggest asset you're going to have is understanding when you're shit in the current conditions and which conditions you make the most money in. Because when you understand that, you actually need to grab your balls and take some size when the market is actually in conditions that's super favorable to you. And if you're new and switching from ES, this is a completely different market. Completely different. It doesn't, bang lows like well, geez, 5 ticks is a lot. It doesn't bang lows 10 to 20 ticks or whatever and then sweep back up. Like if it goes 10 ticks below a low, it's gone. It's not coming back. Especially when it's already traded out and the value area for the sessions then say shifted down and POC is also coming down with it as well. So when it breaks a level with some size, it doesn't normally come back a lot. Exactly, Max. So in essence, right now, that's ticked up to 71s on the 10 year. So I know that when we were up here, it was at 67s. So there's more selling pressure going to come in, uh, come into treasuries, while the yields are currently like this. Now, if we then tick back up to 69s, then likely, we would have probably tried to reprint there. But saying when the 5 year come up here, remember we were extremely bid, not one person had the balls to hit into this level, which is really telling. So now we're now ticked up to 73s here. And you notice the whole curve. I mean, UB is just probing the lows. So Matt, hopefully that answers your question, mate. It's a pretty long-winded one, but it always is with me. Max, as far as I'm aware, this data is real time as you're getting, so as soon as it ticks up and changes. But the thing is, mate, there's not that much volume that goes on in the actual yield data. If you check the CME, it's not, only the big players are trading that. But it is the closest thing you're getting to 100% inverse. But I would say as close as you're getting to is real time as this, to be honest. I've not found any other more efficient way to get the yield data than this. It is a gem having this. Not expensive, man. It's like 160 bucks a month or something to have it, but honestly, it makes such a big difference. It's like you're getting to see round the corner. Well, this is the thing, mate. You need to be at peace with what you're doing, Matt. Just because the trade goes more doesn't mean you should have held it. You need to make your decision prior to getting into the trade, and if you execute the trade well and it goes in your favour, happy days. Don't beat yourself up about what the trade is going to do. That's not how it is. Because I can tell you, if you're only looking to take one tick, your win rate will be higher. You can look to scratch them. You know, you win the game a lot more, a lot longer. Sorry, and you just have much more consistent days if you're doing that. There will be days where you take some more, but you need to make up your mind before it and stick with your plan. In terms of what you're looking to take for that specific trade. And the market changes. This is really directional. It's not normally like that. I mean, you need to be nuts when it comes to the roll to actually trade direction on the roll. It doesn't really move. You know, there's like 4 million contracts trading the 10 year, and it's in like a 18 to 20 tick range for the day. So I'm not gonna jinx anyone, but when the market's like that and you're only scalping for one tick, it's kind of hard. There's so much two-way trade. The market doesn't go anywhere, so it's like a scalping paradise when that happens. Both the 10 year and the 5 year have ticked down. I mean, yields are just mooning at the minute. But yeah, how did you guys do in ES today? Did do any excitements? Anything cool happen? Mm, 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 mm. Also, talk about a range algo. Look at this guy. They turned this on. I think they've actually started to turn it on about two half two in the session. They turn on this ridiculous algorithm that just quotes on both sides. They've actually done that for a long time, but it's so aggressive on the 10 year. I mean, this is pretty much all she wrote here. We're going to need to see yields really pull back in order for the 10 year to pull into value. Also, if you guys could like the stream for me, share it. If you're not yet subscribed, which I'm assuming you are, but if you're not, clicky clicky for me. There is so much algo flashing on the 2 year. It's the most prominent one these days because of the K algo, of course. Look at this guy flashing bottom right chart, continually flashing 320. See him down here? He's like showing his Christmas spirit with the Christmas tree. He's now 318. The 2 years really bad for that. It's a really hard market to trade. It's only one I would ever use to spread these days and use for correlations. Something if I was ever in a pinch on the tens, I would maybe spread the twos. The idea is just not to get a pinch, right? And I would only, if it's a directional day, you just need to take your lumps, to be honest. But if we're in the roll, for example, and you're in a pinch, there's no danger because the market's not going anywhere, so you can spread. Wow. There we go, 10 years is off. Let's see if they tick back up. We'll do a little bit more treasury streaming, but I'm aware, guys, that it's probably like watching paint dry for you. But hopefully, it gives you the opportunity to see different markets because everyone trades ES, and NQ is not even a market. It's it's almost an insult of a market, to be honest. What is interesting though is the yields didn't tick up to crack the lows. And we are negative 5.2k in the last 36 minutes on the 10 year. 5 year negative 3.6. Oh, he did. He did, Rob. Nice, mate. Very nice. I can't believe how much treasuries are getting hammered this week, man. Considering the Fed is about to cut and the market is just like, we don't care. Trump's coming in, you know, tariffs, tariffs and inflation to the moon. Nice, Rob. Are you still dipping your toes into? Are you still actually trading? Not as actively, but still got a hand in. To be honest, mate, it's almost, it's like part of the makeup for doing it for that long. It's hard to not have a look, isn't it? There's certainly someone willing to absorb here at 27 and a halfs. I was gonna say that, mate. You'd be bored out of your mind. To be fair, I don't know what's more boring: watching Treasuries 20 minutes before close on a Friday, or retirement. I think it's a coin toss for that, mate. As long as you're doing it, mate, just as a an interest to keep the hand in. If we're doing plenty more painting and a couple more beers. Haha, good man. Good man, that's what I like to hear. Mm, yeah, we've got next week for trading, and then that's all she wrote. I may see what happens in between Christmas and New Year for a couple of sessions, but then that's it till like 3rd to 4th of Jan. And then 2024 is under the belt. Another year older and wiser. How depressing. Telling you guys, no wonder prop firms banned this. Do you know why? Because you can't, you know, you're certainly not going to lose your shirts trading treasuries at this time, and it doesn't move. The irony is, if you create a sim-funded prop firm, you would not allow them to trade treasuries. But if you actually created a prop firm desk, it would probably be the only product you would allow people to trade. No one would be allowed to trade indices. I'd probably, if you were to handpick some products, I'd probably have them on ags, some euro stocks. Maybe if they're feeling pretty frisky, on the fixed income side, they'd probably trade the bund, and then some US Treasuries. That would be it. No one would be touching US indices, in my opinion. But then, of course, sim funded, they actually don't want you to trade any of them because then you take money from them, which is why they ban them. You need to ask yourself why. Because they're basically a casino. Same business model as a casino. Okay, we have ticked down. Someone is really, really not wanting price to drop below here. Below 27 and a halfs. Every day this week, the market has literally finished at the lows. It's been the exact same action every day. It's well overdue a bit of a rally, to be honest. Alex, how's it going, dude? Not seen you in a while, matey. What's happening? How's Tricks been? You been behaving? Still trading, getting better. Awesome stuff, dude. Awesome stuff. You still on the bookmap grind, or you still trading NQ? What's cracking? Wow. 15 minutes before close and someone whacks 754 contracts into the bid. There's 1132 contracts I've hit into this price. Bid is not flinched. Nice. Very good. Yeah, I would say that's pretty much. You trade NQ and ES though, don't you? Nice one. That's what I like to hear, mates. Happy days. Mm, mm, mm. Yeah, exactly. Bookmap's a nice visualization tool. I suppose if I probably just started trading, I would be using something like that, but when I started, we didn't have all of those wacky tools. So, pretty much just on for me. But yeah, it's a nice way to visualize things. I completely agree. That's awesome stuff. Let's see if someone's going to press into the lows. There we go, 100 into the lows on ZB. This is just relentless. Nearly 5,000 contracts absorbed in this price. It's over 5,000 now. If the 5 year does take, sorry, the 10 year does take out this offer, UB and ZB will probably tick back up. It's trying. Yeah, exactly. If you track the trading NQ, you kind of need to be tracking the Mag 7s. With something like Tick Strike, if you can withstand that annoying ticking. Absolute clear as day iceberg here on 27s. So it really does not want this market to go down right here. Well, it depends on which product you're trading, mates. Are you talking about the 10-year notes? Are you talking about the 30-year? It really depends. What product? I would say 10-year note, minimum of 4k, and 30-year minimum of 1k. But yeah, 6,500 contracts into this price, also with a back ticking of 18. So someone could be accumulating here before the close in 8 minutes and then trying at least bash its price up, to 28, 28 and a half. So 3,232 contracts hit into the bids here, and then there's another 2,500 shown. So they're happily absorbing right now, and let's see, they're not really pressing into the offer. 414 lifted into the offer with some size showing on MBO. So we're not going to go very far here. And there's 1,200 contracts lifted into the offer on ZB. If that does take it, then some more size will lift into UB. And then they've just pulled, there we go, sneaky, sneaky. Just pulled the offer on the 10s, and then as they do that, everything else ticks up. And you can see that how that was happening because they just absorbed like 8,500 contracts across in one tick. Then they pulled 1,000 or so contracts from the offer. As they did that, the rest of the market ticks up, specifically the 30 and the ultra bond. That was a nice order flow moment for you. You can see now the offer is pulling. Yeah, just before the close. The offer is just completely cancelling now. And yet they're not fighting back into the bid. Let's see if they do. $30 should be clearing that price. Wow, it just cleared 4k. Jeez. But the yield is still ticking down, so it's hard to get filled at this time. You can maybe trade ultras. Even ZV is too thick. Yields need to try and at least tick below 73 basis points. Let me know if that helps, Aaron. 4 minutes till the close, till we see some action in bonds. Don't know how much action will be there, but there will be some. Wow, 3.5k shown on the bid that one order. If they hit back into this, it'll probably cancel. It looks to be for real. Yields a tick down to 73s. They're also showing some size in the 30-year to try and break through this price. And I see we can try and challenge 10 or 11s on ZB. Obsidian, how's it going, dudes? What's happening, mates? You a good session? Nice, Aaron. Yeah, we're not going anywhere. Yields will need to sell off in order for us to do anything, but it's, we're 2 minutes to close. I mean, it's pretty much it. We're going to finish pretty much where we are. I mean, we need the offer to cancel dramatically here. I think ZB could still probe 10s. Still a couple of ticks, but the 10-year's chalked. 10-year is chalkarood. Awesome, dude. That's what I like to hear. Can be a bit of spreading. Wow. Just a few contracts trading here. Just a few. Mm. 20,000 contracts absorbed into the offer. XR. Nice, you had a good day, dude. Nice, a good day. Yeah, Dom takes a long time to learn, mate. It's not something you can, pick up in a day, to be honest. This is a good spot to buy the Ultra 10-year here for a tick. You just need this bid to thicken up, then it should be good to go. I'd be a little bit concerned if the 10-year broke this level, but they're still really happy to buy at the minute. Yeah, that reminds me, you could go to my coffee and assist me with the coffee while you're at it, dude. That would be helpful. My coffee fund, which is in the description. I actually had some new coffee arrive today. Actually, I've got a Barista Pro, Nespresso Barista Pro. Really good piece of kit. It was given to me as a gift. Wow, 16,000 contracts. So yeah, it's some new coffee arrive. So it's excellent getting some new coffee, man. Pop in the good pods. It's like you're at a coffee shop continuously. Yields are just mooning continuously. Is that like a cafe de terre? The little presser thing. It's like a percolated coffee and then press it, right? I typically drink lungos or espressos. No milk, just no milk or sugar, just straight up. And then that way you get to really enjoy the coffee. And if you have bad coffee, you'll know about it quickly. Yeah, bad coffee. Yeah, bad coffee you can't drink black. It will make you sick. Even the ones you get in Starbucks and stuff, man, are pretty bitter. They're not that nice in espresso.
Hello?
Hello, how's it going?
Hello, how it's going? Ah, dinner. Oh, all
Sorted?
good. All sorted. So we closed at the bottom. Wow, what the hell?
Yeah, surprise, surprise, huh?
Surprise, surprise. It's the fourth day it does this. Just straight down.
Yep.
Yeah, just wait for the open, place a sell order, and leave it to the end of the day. Yes, minus 33 and again plus 72 on the yields on the 30. 68, sorry. 72 on the 20.
Mm-hmm.
Wow.
Crazy. See, Obsidian is saying, I'm wondering if it's time to start fading the strength on bonds. Yeah, I mean, see what next week begins, but this has been probably the biggest down week of bonds we've had in a while, apart from the Trump win in election. That was the last time we've seen it as much, but that was more like a couple of days, though, right? This has been a week of just gradual pain for buyers.
Complete pain.
That's a good question. Is the volume traded more important than the resting orders when trading the DOM? What's your take on that?
Yes, it is. I think if we do in a scale of percentage, I think 70% of importance I would attribute to to the actual market
Prince.
orders.
Mm-hmm.
Then because a limit order can always be removed, and it's often the case. Um, not always. it takes the whole, like now on the DB we have 1,305 and 576 on the best bid offer, 576 on the bid. It doesn't take really 575 orders, because when some size aggressively starts hitting oh 07, it's just
Yeah,
gonna pull
look at that. They've just
Look,
pulled 400 or 500 of them.
just 124 traded there in total now for it to go bid the oh 06. So yeah, while sometimes it might seem supporting or something, mm, just I tend to I just look at the best bid offer for to get for the right moment to get a good position in the queue. Basically, that's it.
Hmm.
And I want to see when I enter, I want to see the bid or the offer refreshing, adding some size after me,
Hmm.
so
Completely.
that I know that at least the next one tick is gonna go in my favor, or if I wanna go on the out of the offer, I see it's just more possible. Do you agree?
Exactly. Yep. Do the exact same thing. I don't really, unless, say for example, we clear the 328 here on the offer. I know, and then it goes bid. I wouldn't really look to bid that. I would probably look to bid here, as an example. Um, because very typically in treasuries, it will lift this offer, go bid, and then they end up just pulling the bid, and then it goes offered again. Do you know what I mean? So
Yeah.
then you're just stuck in the two-way. You're better to get filled outside of that, and the target is into where the 365s on the 30 year anyway. So yeah, I see it the same. And I would say too that limit orders are important, of course. They're more important in thicker markets like treasuries than they are ES and stuff. ES and
Yeah.
NQ is just market order driven now. Um, but treasury still, is a lot more size on price than any other market. It's very concerning that no one is lifting into, that was 300s into the offer. No one is lifting that at all. There's just no aggressive buying into the market. If it is, it's been absorbed. There we go. It is now. So that's what we're saying. Going bid here on the 30 year is not ideal because most likely,
No.
they'll just tick back here, clear it like that, and go offered. You know, that's the problem. So you want to try and get filled right now at sixes, or even better, get filled in the offer at eights to tick back into sevens, like where it's at now, where it's lifting into the offer.
I think it's under certain circumstances, but you're not gonna see it beforehand. I mean, on a day like today, I'm looking mainly at the ZB right now, but especially today, it's very visible on the 10 year as well. They, of course, limit orders are important when there's clear absorption, like a lot of buying today, like on the 30 today, it's closing in positive delta overall over the session. Oh no, now it's negative, but until 2 hours ago, it was still positive. That means that there was a lot of market buying, and it got all absorbed by a passive seller. But those limits are gonna show up while we are trading that offer. So you're only gonna sense it while we're there, because treasuries have those brackets as well. They're constantly there is a bracket, and they pull, and they when it's time to pull, they will pull because overall the futures are a derivative, and it's a small portion of the underlying cash bond market, no? I don't know if it's small exactly, but yeah, it's a derivative. So if the underlying cash market is moving down, the futures can go up a tick, but not more than that. I mean, sometimes it happens that the yields and the underlying is not moving, and you have like a move of two or three, especially on the UB. I notice I'm a noob on bonds, but I know order flow very well, so I just can notice this stuff. So yeah, overall, these brackets and this stuff on the when it's time to move, they will move because there is an underlying that leads, and the futures must follow. They must simply. Wow, nearly plus 80 basis points on the 10.
That's absolutely bananas.
Maybe you have answered this before, but does the indices being up affect these markets? Absolutely. In theory, the bond and the equity markets are norm. There are I don't remember correctly now, but the correlation should be inverse
Yeah, I think that correlation's dead now.
in an inflationary environment, right?
Yeah, exactly. I mean, it's meant to be inverse, but especially this year, it's been non-existent. I think uh, the main sentiment between it is if risk is on, more money is flowing into equities, which means it's going out of bonds, and if risk is off, money's coming out of equities and then into safe havens such as bonds, yen, or Swiss francs. I would say that your safe havens, which is why I've got them up at the left here. This is the Swissy, and this is the yen here. Um, here they're more they're more correlated on a day-to-day basis with treasuries than the likes of ES. ES, it's not that reliable. The theory works in general, but if you're actually looking to track it day to day, it's not that reliable. To give you an idea, on a month to month basis, the yen the yen in the Swiss franc is like 89 to 96% correlated with treasuries. I'm giving you the range there because obviously sometimes it slightly breaks down. Um, so yeah, because typically when money is flowing out of equities, it normally goes into safe havens, and the safe havens are bonds and yen and CHF. But on the contrary, though, some people say the dollar is a safe haven, which then if more money flows into dollars, then in essence you're meant to see treasuries go down because that's inverse. But as you said, Jagger, it depends on the conditions, right? If it's an inflationary environment or not. Totally. So
I had a nice table on what is the condition and what is the supposed correlation where we have a stagflation, inflation, recession, and
mhm.
deflation. This for something like that. This for so there is commodities, currencies, equity indexes, and bonds. These four asset classes have they change. They
Yeah,
change.
exactly. I mean, bonds absolutely hate growth and inflation. They actually like a recession or rally in the recession terms. Pikey boy, yeah. Sit in the hands is always safe.
but doesn't make money.
Exactly. And I suppose that's where, when it is risky times and, risk is on, that's why people tend to go to bonds because it's better than sitting in cash. Because actually, if it sits in cash, they actually lose money because of inflation. So that's the theory behind it.
I have this note that a friend made while we were doing some courses together about the economy. I read I will read this is something that somebody else wrote and sent me their notes. It is important, just a part that I'm reading now. It is important to know what commodities that country produces, as its currency influences global access to them. When a country's currency is too expensive, one strategy is to rely on bonds and sell commodities and equities from the country. Then the currency is cheap, one might sell bonds and invest in the commodities and equities of the country. It is also important to know the rate of return on bonds because if it is not appealing, the money will be diverted elsewhere. So doesn't
Nice.
uh, it doesn't apply to the current moment because the dollar is expensive right now, well, relatively compared.
Well, are you talking about like CAD taking the likes of oil or AUD taking iron ore, and then depending on the relative markets in there, you're seeing how expensive their currency is, and then effectively arbing between them, right? Is that what you're meaning?
Mhm.
Nice. It's kind of weird though, actually, because gold, you know, this year has kind of did its own thing as well. Well, no wonder
Right.
it's not did
So
anything for like 10 years. It's about time someone got the stick and poked it.
what
Cool.
did the oil do today? Oil is straight up today. Interesting. It's uptrending. It's kind of, well, okay, oil makes wild swings overall, but over the course of this week,
That's probably not helping treasuries either, is it? To be honest,
say that again, sorry.
the higher oil is not helping treasuries either.
No, no, absolutely. It's been going up completely inverse to treasuries this week.
Yep, yep, which makes sense. It's the number one
In
thing that's
higher
gonna.
inflation.
Yes, exactly, exactly.
The fact is that the data is not suggesting higher inflation. It's just an expectation. It's just expectation of a higher inflation. That's the wild thing.
Exactly, and that's the crazy thing for me, as I've been saying this week, is all it takes is like some of these numbers that come out to be revised really badly, and all of this can be undone in a couple of sessions.
Hmm. Hmm.
Because remember, I can't remember. I remember the specific day because I wasn't at my desk. I remember I was out shopping, and the report came out where they had basically overvalued 1 million jobs for the US numbers. I can't. That is just incredible. Whoever did that original valuation, they'd shot. I mean, you can
Probably
understand, being maybe 100,000 off for a couple 100,000, but 1 million jobs.
mm-mm.
I mean, that's bananas.
NFP and inflation data were came out as expected, Pikey.
Yeah,
There was everything was priced in. They shake the market only if there is some surprise or they confirm or negate the current narrative. They didn't, just flat.
yeah. Like if they come out really, really bad numbers, which would give more weight on the fact that the Fed should be cutting, then it would have been a different stance. But the fact that they were already trying to price that in, but I can't remember last time I've seen it though when the market is really not giving a shit what the Fed is saying as much as this. I mean, it's the complete opposite right now for this week.
Yeah, absolutely.
Normally, it's a lot more whippy than that. Like it's up one day, down the next. It's really one-sided.
In the end, we we trade the day, and it doesn't bother us. I mean, of course, when the data comes in and it's a strong beat or a strong miss, then we take the opportunity. Um, but how much does it really influence us if the bonds have been going down or up a whole month or a whole week or a whole year, right?
Yeah, exactly. I mean, don't get me wrong. I would rather the market doesn't do anything. I'd rather it didn't go directional because it's not my nature to press the sell button and just hold the thing for the day. Um,
Yeah.
I wish I could. Life would be easier, but I don't.
Yeah, I wanted to say something about it. I mean, because I saw on our Discord the other day, like, yeah, there is people that use charts. There are others that use DOMs. And I mean, okay, using a DOM isn't a special science. It's nothing special. It's just market going up and down and reading the flow. And it doesn't forcibly make you profitable. To be a profitable trading the DOM, because there is also a lot of guys that say I tried the DOM, but it wasn't speaking to me. I mean, it's not supposed to speak to you. You are supposed to spend 6 months without a single chart, watching the numbers, and of course not just watching them and trying to interpret what is going on. But it's not gonna to speak you overnight. I mean, you know, there's nothing special about it.
Yeah.
So it's perfectly fine to use charts, footprints, market profiles, everything that makes you money and that you think is something repeatable and isn't purely based on the moment and the intuition, because intuition doesn't last. Intuition is not something you can rely on a career that is supposed to last 20 or 30 years. I mean, investors can do that on a market that only goes up, on a trending market like the equities
Yeah.
or crypto or gold, stuff like that, trending markets. But when it comes to intraday trading, to day trading, scalping and stuff like that, at a certain point it really depends on your personality. Like you just said that you cannot hold the press the sell button and wait the whole day. Me too, same. I get nervous. If I'm not in and out in a max now on bonds or in a max of 10 minutes, um, I start to get nervous. Simple.
Mhm.
And I prefer to control the current moment. It's just it comes down to personality, and one shouldn't um, force. If you get nervous scalping for 2 ticks 20 times a day, okay, hold longer. Vice versa, don't force yourself to hold longer if you get nervous. Just find something that you can repeat every single day for the next 20 years. It's everybody has a different nature.
Mhm. I'm gonna butcher your name here. Anoni. Do you use time and sales? Me personally, go through phases. Not really. No. I much more prefer watching the prints. I find if I've got time and sales up, the only time I would be interested in seeing it is if it's huge size that comes off, like in one clip. Um, And the reason being is I've got 6 DOMs up, so I can't have a time and sales for every one of them. It just becomes, you end up the inside prints are, in essence, timer sales combined, right? It's just market orders. You're just seeing when they're going off. The only thing I would say with time and sales that is advantageous is you get to see if any timers are going off. But again, it's really hard to spot with the actual eye. You need to filter it for some specific size. So
1 month watching the dawn per grady. Yeah, possible. No way I'm not sitting here for 20 years and one big bet can set you free. The fact is that um I don't know. I'm not a better. I don't bet. That is an issue with your personal psychology, Jagger. Absolutely, absolutely.
yeah, I would say um, probably. I mean, the thing is, you can probably hold a little bit longer, but I think when it's in thicker markets, don't get me wrong, there's no point being in and out so soon on ES. You need to take a bigger clip of ES now. Um, but with likes of treasuries, you can always re-enter. You've got the tick to commission ratio in your favour a lot. Um, so yeah, and I think if you're going for something that's like, say you're going for 3, 4 ticks in treasuries, that you need to be holding that for 10 minutes at least. Especially when it's PM session or something. You don't normally get 4 ticks, without holding it for a little while. So it all depends of what you're doing prior to the trade, right? If you before you get in the trade, you're like, I should probably run this or whatever the case may be. Like, you need to make that decision. Making that decision while you're in the trade is normally not the best way to go.
Mm.
Landlord food stamps. Yeah, I like it.
Didn't the Hawk to a rug pull? So everybody lost everything because before they even realized there was a pump and dump.
What actually happened with that? Just the famous, you know, influencers involved, pump it, and then the key stakeholders just pulled it. Is that what happened there, or
So basically they pumped the coin and out of nowhere they sold they were saying in the white paper, of course it was fake, that the dev team wasn't holding a large amount of the market cap, but of course it wasn't true.
right?
And so yeah, they wiped like they sold everything and they triggered a sell-off and goodbye everybody.
Wow,
Like
happens a lot in crypto, man. That's the thing. You need to just pick something in the top 100 coin market cap. Going with all these new meme coins and stuff is just a recipe to disaster.
yeah, yeah, the, the original girl that became famous because she said absolute nonsense. We live in crazy times.
Oh wow, right. So you're saying that they just did the classic ICO, sold to investors, investors dumped, but that's the most common thing ever, right? And then did they just? I mean, how did it? How is it a scam? Then I mean that's very common. If they held The investors hold 90% of the supply. Well, that's exactly it. I mean, who in the right mind is buying into these? I mean, seriously, just pick. I mean, if you want to feel frisky, go out with the top. Go out with the top 100 in coin market cap. Don't go any further than top 250 or something. As soon as you start getting into like the top 1,000 in coin market cap, like greater than that, you're just asking to get scammed. To be honest,
Yeah,
I never
you
trade any
can be lucky,
leverage.
but
Yeah, you might as well just buy a lottery ticket. Honestly, at that point, you get one that's got a good team. They've got plenty of money behind them. Their team have got some actual track record, experience, and things. You pump in something like 2 to 5k in it, hold it for 10x, and you're done. That's pretty realistic in crypto to do. But doing that, getting these like 1000x and stuff, and obviously to get that, you're gonna have to try and find the next. It's the equivalent of buying penny stocks at that rate. It's the same thing. And that's
mm,
the one thing that people seem to forget about crypto. There is no difference between a company issuing shares and a company issuing tokens. It's the same thing. You're just buying a shit company. Just because they're on crypto and they've got some sort of blockchain attachment to it doesn't mean anything. You know? Um, it's just a fancy way to raise capital these days. So that's why you always need to check the team that's behind it. And for the love of God, don't trade any leverage on these products either. You know? I'd
yeah,
imagine Binance, when they're offering you leverage products, they're potentially taking the other side of your trades. They're almost booking you, like CFD firms. I'd imagine. I don't know that's exactly how it would be, but I'd imagine if it was Binance, that would probably be the way to do it, right? Because as soon as you start giving people 5 to 10 leverage in crypto, they're going to do their arse in a day, surely. I wonder if anyone could probably confirm that, but I'd imagine that top boys at the top boys at Binance are probably taking the other side of those trades.
look at Tesla. Since the summer, it moved 3 times more than Bitcoin uh, overall. Yeah, I know somebody that bought Tesla when it was at around 170, 180 in the summer. I don't know if he held until now, but how much is it?
Was Tesla up this year?
430 today, and it was 170 4 months ago.
So it's like 2.5 times or something.
Um, from May to now, it's a 213%
Right,
um,
close enough.
increase, while Bitcoin the same time from May, May is a 81% increase. So Tesla doubled that. Actually, it benefit from the Trump trade much more because obviously
Elon's
Elon's
literally in Trump's back pocket. Yeah.
oh, even if you look at Nvidia beats Bitcoin as well. Mm,
Nvidia is, I mean, they've just come out of nowhere in the last couple of years. I mean, everyone knew who Nvidia was, but not a massive, not a huge company, right? Well, saying that they've always been a huge company, but you know what I mean. Not the size they are now. It's just madness.
yeah, they went plus 1,385% in a year and a half.
Jesus.
1,385%. Yeah, thanks to AI.
What caused that though? Was it? Do you think it's the new revolution of the graphics cards? Is it AI? I mean, surely cryptocurrency booming is bound to be helping their business because everyone's scalping up the GPUs to mine, right?
No, I think that is a very minimal part now. It's because because a GPU is by a big magnitude faster in processing than a CPU,
Mhm. Mhm.
and the complex systems require GPU speed,
Yes.
and so they go from basic graphic cards to something much more advanced than that. I mean, the whole AI uses GPU GPUs to process all that big amounts of data. But it's not only that. It's just that they found themselves sitting on what the world needed in terms of progressing technology over CPUs, basically.
Over CPUs.
Yeah,
Are you talking?
because
Sorry, you're talking about GPUs. So they're basically they're yeah, like the 4090s, the massive graphics cards that they've got is pretty much what everyone's using, right? Multitudes of them to do that data, or is that just what's available to retail and they've got much bigger cards that's available at a corporate level? Or I mean, I don't know that much about Nvidia, but
they have products that they sell in thousand and hundred and thousand units that cost their GPUs that cost like $100,000 that
right,
are for businesses, and
right,
everybody wants them. They completely control the market.
wow, okay, okay, with you, interesting. They are much better graphics cards than AMD, to be honest. Saying that, and I've got an AMD card. Ah, is that what it is? Okay, you said that they need a lot of GPUs for training AI. Okay, of course, it's not. They're not training them with fresh air, are they? It's not like they just put loads of hamsters on the wheel and get them to run round. Of course. Aaron, you need to tell this guy if this is his first bull run and whatever he's doing, he needs to sell some. I reckon next year, if it comes in, so I'm going to reiterate this again. This has been an absolutely fiendish year for NQ and S&P, and yet if it wasn't for the Mag 7 stocks, we would actually be in a negative year. So all it takes for the stock market to crash is the Mag 7s to completely bleed. I mean, we're getting into absolutely wild bubble territory for the stock
Yeah,
market. And I think I think if it comes in and Trump is not as bullish as they think, and it doesn't pan out with growth, 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 make America great again kind of pattern that's been happening, and something bad happens, the Mag 7 start to bleed, it's going to be carnage. Um, do you remember that day it happened a number of months ago? I can't remember which day, but we nearly hit the limit down cap on NQ. Do you remember that? I think it was
yeah,
it was a
yes, yes.
was that
5th of August.
5th of August. Wow,
With
you're good.
5th of
Remember?
August, VIX plus 16 overnight
Yes,
was
yes. It was like
great.
20. It was not like 25, 30 VIX or something ridiculous at that point.
Yeah,
Like, yeah. So that's the type of action that I feel could happen, and all it takes is the Mag 7s to bleed. Also couple that with the fact that there's, inverted yield curve for a while, and the fact that the US has fiendish amounts of debt that is, I just don't know what they're going to do about that. when you weigh everything up, it doesn't make any sense why the stock market is making complete higher highs, all-time highs. It doesn't make any sense. We've not really recovered yet from COVID, realistically. Um, it's just adding more debt onto the pile, and eventually that's going to catch up. And of course, if it happens in the US, then the rest of the world's fucked. So,
Absolutely.
not to be the doom and gloom, but it's going to happen. You know, um, because if I'll try and dig up a chart for you guys to look at, but pretty much the average weighted amount for the stocks, across the S&P, if it wasn't for the Mag Sevens, it would have been an absolutely shocking year for the S&P. It's actually, I think it's worse than 2007 if you take out the Mag Sevens, which is,
And the bubble is bigger.
yes, exactly. And this time it's not CDOs that's causing it. And it'll be interesting, but I mean the fact that the AI is now completely mainstream. You've got Chat GPT that you can literally ask it to do your homework for you, and it does it. Or it's crazy what you can ask it to do. But then here's the question, right? How does Chat GPT make any money as a business? I know they'll be doing it corporate. Is that it? Going to.
No, they are they're not public. They're private. They're still private.
Oh, really? Wow.
Yeah, yeah. They just raise capital and people invest. I don't know. There must be shady stuff behind. Um, yeah, they have the subscription. Yes, okay, but not that much. Just investors. They're based on they're still private and they were supposed to be open. That's the name, OpenAI. But yeah, they are charging money for it. But I mean, um,
Yeah, I would say, guys, it's not going to be Trump's fault, but it's the fact that the market, you know, since the election, has been interpreting, you know, the Trump administration going to be extremely growth driven and good for the economy. So strong dollar, strong stocks, growth, growth, growth. If that at all doesn't happen, then there's going to be a huge unwind. I think it's mainly the main concern, I would say. It just seems weird when you think about it, the whole kind of setup.
the CFTC just published the um, the, the
The
COT, the code.
yes,
This so we have just a curiosity because I have it here on Refinitiv. Japanese yen net long position is 25,000 contracts this week. Euro net short position is minus 75,000. British pound net long is 27.
is that on
Swiss
your main
franc
notes, mate? Let me see if I can bring it up here. Is that on your
news monitor, it showed up. Swiss franc net
There we
short
go.
position of minus 34,000 contracts. Bitcoin net short position is minus 720, it is nothing. Equity fund managers cut S&P 500 CME net long position by 10,000 contracts to 1 million. They're still long S&P. Speculators speculators have a net short position on S&P of 308,000 contracts this week.
They always do, to be
Yeah.
honest. Like the speculators, which is the fund, it's almost like they're taking the other side of the trades. It's always the case, right? It's the same in treasuries, to be honest. When you look at the treasury side, you seeing that everything is net. The net is the net short position on treasuries, which I mean makes sense now. The markets, but that's been net short of that, mate, for months, man. I suppose it makes sense. It's been the biggest dump in a long time if you look back before the Trump thing, right?
Yeah, true.
Hmm. And are these not a week behind as well?
Uh, it's the week ending on the yeah. It's for the last week.
Yeah. Let me just quickly have a look at that. Did they increase um uh my brain? Did they increase the net short positions or did they trim? I'm interested. From the previous week. They trimmed the trimmed Treasury bond futures, increased the 2 year, increased the US Ultra bond, trimmed the 10 year, and trimmed the 5 year, but still net shorts on everything. So these boys are having an absolute field day at the moment.
Mm-mm. And I believe they are just added this week as well.
Yes, exactly. It's so when we catch up next week, it's probably going to be the net short positions. Surely to goodness though that they must have been people have been crying out for years like why are they working a week in arrears?
Mm,
Do you know what I mean? It's
yeah,
2025 and these guys are still working a week in arrears. It's not like they don't have the data. They have the data the next day. Is there a reason behind
yeah,
that?
or even.
Is that just the way they do it?
Mm-mm,
They always have done,
absolutely.
right?
Likely, it's not always the case that the strong dollar means that the market. I think you mean the equity markets or whatever, because they have been positively correlated for um, a good part of the year this year. To be honest, not always the case. It really depends.
Yeah, and that's the thing. The data that comes out, the tier one data affects the dollar more. ES really does its own thing these days. You never really know with a degree of certainty what it's going to do. For the news plays that come out with the tier one data, that's pretty honest how it affects the dollar and treasuries. But ES is its own thing. It has more weight these days in options and the Mag Sevens. I mean, when you traded ES frequently, did you have the Mag Sevens up, Jagger?
Yes, I always follow that is the top three: Apple, Microsoft, and Nvidia.
Yeah,
Much better correlation than YM or RTY, to be honest.
yeah. I still to this day don't know why the Dow is such a shit market. It has the potential to be like a Eurostox, in my opinion, and I don't know why it's so shit.
What, yes?
No, the Dow.
Oh, the Dow. I really don't know.
I don't know why it's so
It's
shit,
crazy.
and the fact it's a CBOT product as well.
Yeah,
Normally their products are better, in my opinion. You know, because it's what the 30. I know it's got their own averages and stuff, but you know, you, I just don't understand why it's so thin.
nobody trades that. Really nobody.
The Dow, no, no.
It's just there because yes, probably it costs the CBOT more to maintain it that than what they earn from the commissions.
What's the daily volume in that thing?
Let me see. I will check out bar chart, but it's always not even on the first page of the most traded contracts.
Oh wow. Oh look, we're
Let me
going
see
big
bar
now.
chart. Yeah, it's kind of recovering. Have positive deltas on across the curve, plus 2000, plus 4000 on the yen.
Yeah,
Close to 1,000 but it's not the first time it does so much positive delta. Oh, but the yields are breaking the range low, kind
yeah.
of.
Well, that was it. I mean, the fade was pretty much the lowest back into where it is now. I don't think we're not gonna challenge. I
It's
don't
not
think we'll
going
challenge 29 and a
anywhere.
halves here. No, exactly. The play was to ride it back in. TN, see if you're looking to do that at this time, TN's the much nicer play. And actually
Or
make,
UB,
what's that, sorry?
maybe even UB, maybe to the 17s.
Yeah,
No, not that much. 2-3 ticks maximum for the last closing flow short.
like I think if we get up to 14s on UB, I'd probably look to fade that back into the point of control. I just don't think we're going to get that high. Yeah, there's a couple of ticks on offer. Nothing to write home about though.
So yes, keeps being the most traded contract in the world. 1,600,000 contracts today. 1,002,000 and 200,000 on NQ, second place. But we also must consider the notional value. ZN is third. Yes, micro yes is fourth, but
Wow.
its worthless is just in volume.
Yeah, volume
Being
contracts.
volume contract, so in notional value is insignificant. If we then take the the ZF, the 5-year is next. The SQ, the 3-month SOFR, then the Ultra 10-year, then the 2-year, and then the 30-year bond. Then we have the Russell, the oil, natural gas, the Ultra bond, gold, corn, and only then we have the Dow futures with only 100,000 contracts traded, a bit
Wow.
more, 180,000,
Is that
with
it?
a notional. But let's calculate how much is that, assuming full margin per contract. Per 5, which is the tick value, per 43,000 in notional value, that is roughly $25 billion, assuming full margin, full contract value.
Hmm. What did you say there? 20? Did you say 20 billion or
25
25
million, sorry,
million?
$25 million, yeah,
Wow.
assuming full contract
Full
size,
margin.
which no margin, no margin. But
So you're two and a
roughly,
half
I've
million
read
at
this.
10% or something.
Actually, if you count that probably the 70% of the players on of the equity markets are big firms, they have to provide full contract value, not even margin.
Hmm.
70% of the participants have to basically have to provide the. But yes, they have stops. It's just notional, just an idea. Market makers and all that stuff have always have to provide the full contract value. Heike, let us know when you take that meme coin and you make the $1 million. Please let me know. The strategy looks solid, mates.
So the Dow as well, you're basically saying there's nothing traded on it. That's shocking. Shame, really.
Yeah.
That'd be why
Overall, it's
it's so thin. Or it still doesn't make sense as to why it's thin. I mean, corn is not that much more than that. Like what, 400k or something, and it's 500 bid and offer. That's still four or
yeah.
five times it, but yeah.
Overall, I don't like though as an index. To be honest, it's shitty. It's doomed because it's the only equity index that is price weighted, not market cap weighted.
Mhm.
So if its components increase in price, it increases, not market cap. So sometimes that's why sometimes it is uncorrelated to ES and NQ.
Yeah, it can't beat a game of golf. But yeah, anyway, this crypto run has been a bit rubbish, to be honest. It's been mostly Bitcoin and Ethereum, right? I've not like I've been checking it. Are the altcoins moving? It's not like 2017 we just touched any altcoin and made money. Seems to have not really started yet, to be honest.
Some did, like Doge, XRP increased. Let me tell you, XRP. I had some XRP that I forgot about, and I sold them as soon as. Luckily, it was like a week ago or so.
Mhm.
It increased 469% from November. XRP Ripple was a nice one. I had some like I don't know 100 or 150 XRPs. So well, it still was nice to see, but as soon as I completely forgot about them. They were I was having them since I don't even know when I bought them. So,
Nice.
but yeah, I opened an old wallet just to check, and I saw, wow, hey,
Hey.
hey,
It's kind of like you found 20 quid in your jacket pocket you forgot about. It's nice.
yeah, exactly.
This day and age, no one, people find money in an old crypto wallet instead of their pocket. How times have changed.
Oh, Pike, I don't know if many here trade keep crypto. Probably nobody. As I abandoned that market completely.
It's
There you go.
good to buy
Last
and hold,
20
but
seconds.
not day trade, right? It's dicey. You need to
Complicated.
you need to aggregate
Lot of
all the
stuff to look at.
volume as well.
Yeah, exactly. At least for the top 7 exchanges, and then there are strategies to look for what on chain is happening and stuff like that. Then, well, the data is all transparent, so you have more data available to analyze crypto. The Anonymous is asking how many screens you got.
Two, just two, not anything wild like 6 screens that you see in Axie or anything. I think that's a bit much. I find that the more screens you've got, the more shit you put on them. To be honest, need some charts, maybe some news, some Discord. I've got a screen for a couple of charts, some news,
True.
some Discord. The other stuff is my DOMs. That's all I need, personally. What about you? You've got a few though, Jagger, haven't you? Or yours is quite compact though, right? Smaller but compact in terms of
Yeah, I've got three,
three.
but one is vertical, the other are stuck on one on each other. The main one is just for the DOMs. The top one is for some charts. The left one is well now it's for Discord, order management, some other mm, the
News.
yields chart, news and stuff like that. Yeah,
Right.
I was too tight with just two, but three is enough. I don't need a fourth one.
Yeah. Yeah. A vertical one's quite a good idea for the DOMs. I think if I was to trade thinner markets, I would definitely need to go with a vertical one. That would be interesting because then you could see the whole depth. That would be quite cool. Like if you're trading NQ and that was your market, if you had a vertical one, it could be quite good to see. It's probably still not enough with NQ, but I would like to see. Not that I'm recommending trying that, but I would like to see it. There we go. UB got up to this level, just away from it. It's a nice fit. You're not getting filled on that. You'd have to hit market to get filled. You're not getting filled at these times, man.
Like, yeah, I remember that you wanted to buy a super. I remember. Sorry? Esco poi domani, vai tranquilla. È 10:30. Pulisco io, tranquilla.
It depends on the markets, Anoni. So I use market profile just to look at the markets. If I was trading ES, I would maybe use like a Heikin-Ashi thing to smooth things, so I can have a glance at what's happened overnight. But when I trade treasuries, I don't. You know, I can get behind using a footprint or something, but I'm very much of just keep it simple. And DOMs is the thing I've always known. So, and I've got absolutely everything on this screen that I would possibly need, apart from apart from maybe a market profile chart. But I don't really. I look at that a couple of times a day just to see if we're coming into any last week's POC or something along those lines, and we may expect some chop. But that's really about it. But you can see I've got everything marked on the charts here. Um, I've got the current price. I've got the last hour's delta. I've got pivots in the label column. That shouldn't be there because that's an old line. Let me delete that. Automatically it charts the previous day low, the pivot points, previous day open, previous day high, and then if yesterday's value area high, yesterday's value area low, and this is yesterday's POC. It's just covered. So yeah, it plots all that automatically for me. So I don't need anything else. I didn't mean to clear those inside prints there. Yeah, so that's pretty much it. And I find personally that the the more you get away from charts, the more you're actually in the now, rather than trying to have a bias all the time. Because typically your biggest losing days as a trader in your career has probably been the days that you've been really stubborn and stuck with your bias instead of just focusing on the now. You get paid to be reactive in trading, not to predict, is my opinion.
Exactly. True.
That's the way that I see it. So much so that I don't even have a price on it. I've got it on a 30-year, but that's for another reason.
Alright, matey. I need to go.
Sweet buddy.
Guys, thank you for participating and catch you next week.
No problem, mate.
Remember to check our Discord if you're not in already. Goodbye. Good night.
Cheers, mate. And only, are you saying splitting the delta in terms of the, having it? So I've got, this is kind of the way I see for delta. I use that as a way to spot the absorption at the lows and just where the most is traded, right? This is the running delta for last hour. So, for the last 6 minutes now, this is what's currently happening. So when I'm on the ball and I'm actually really paying attention, I'll see if these flip. And if I'm looking to trade the ultras, I can I can go into them and have a look and see here. Yeah, main thing for me is to just be in the now. That's basically the most important thing. Um, so much so that I don't even have the price, and it's just a constant reminder that trade what you see and look at the inside prints as to what's happening, rather than trying to think I think this market's going to go down or up. I don't need the market to go down or up for me to make money. I just need to, if it's going down, I'm going to take it all the way down as it, and continually enter as it goes down, rather than take the one position and hold it for a long period of time. It's just not the way I roll. That only works when you're trading markets where the commissions are good. So like the 30 year, for example, where you get 9 trades for every tick in order to you just need to make one tick in every 9 trades in order for you to still be profitable, which is awesome. Um, yeah, exactly, GG. That's a really good point. I think you probably need to respond to the market behavior that it's telling you, and then you know learn to react to it instead of predict. Personally, but yeah, it's a really good point, mate. This is so a couple of things is inspiration. The only thing I've added for inspiration is the yields. Um, but I've always had yield data on charts. It's just been not as I don't want to say reliable. Yield data is really hard to get, you know. Um, so this is the only way I've found to get yields, but everything else is my own doing, and it's relatively straightforward. It's just inside prints, limit orders, some MBO stuff. This is the MBO data here. Um, and then this is the amount of selling that's come into the bid. This is the amount of buying that's come into the ask. This is just a volume profile. We actually did manage to move the point of control for the session down here, which is interesting. Yeah, and that's pretty much it. It's been taking a long time to develop this kind of stuff. I mean, every single thing you see in this chart, out with the yields, is a customization thing. Everything from every line to color to font size to this box to this little thing, and everything is a custom study or a customization field. No, I'm just seeing that define price reacts off large levels. Yes. Yeah, it definitely does. But again, you're not going to predict that it does. You need the market to show you that it is. It needs to respond off those levels, and also you need the correlations to be in your favor as well. Anyways, guys, let me know if you've got any last questions, and we'll look to call it. Hopefully, you guys have enjoyed the stream for Friday. Every order. Not in treasuries when it's thicker. I only want to see above 500 on the 10 year and 200 on the 5, and I think I've got it set to 100 on UB. There's Amzi. How's it going, dudes? I'm doing good, mate. Still plugging away, alive and kicking. Anoni, how do you remember where those orders were? What do you mean, what orders, mate? Sorry. No, I've got my own Delta thing, matey. I've not tried ATAS at all. I mean, Delta just I like to see it as a number. You know, I'm more of a numbers guy. Hence why I've got six DOMs up in front of me. But it's really hard. I couldn't answer questions and pay attention to the DOMs at the same time. It's way too hard. You know, you have to be laser focused for like 3 4 hours of the day. Plenty of coffee, some breaks. You need to be fueled up. You know, it's very very taxing staring at the three yields, watching inside prints, checking anything that's out of whack, checking correlations. You know, it's very tiring. It's not easy. Thanks, JJ. Much appreciated, dude, for the kind words. So when size comes in through large clips, how do you remember where it happens when it comes back? So I can see that with the volume profile, and I can see that here with where the size. And if it's a huge iceberg, I do this. So I control here, do this, and then mark ice. There we go. If I spot an iceberg and I want to note it, that's what I do. Typically. And blue for ice. Bye. Honestly, it's harder to fake it than it is actually to make the money, to be honest. Especially when you get proficient at it, man. You know? The reason why I trade these slow markets, it's not for the goodness of my health. It's boring. I mean, it's incredibly boring. But I want it to be boring and consistent, so the downside is capped, and you can just continually scalp away for 1 and 2 ticks. Get good at it, and you're shifting 3 4 lots at a time. You're doing it multiple times a day, and you can make a couple of grand a day once you get proficient at it. But you need to really know the conditions that you're looking to trade. That's the number one factor. And only I would say they play a role, mate, but they're not like it's not like when I see an iceberg I go long or something. It's just if I see a huge iceberg on the bid, say like right now on the 10 year, um, it may then make me want to buy something on the 30 year, for example, because the market's so correlated. It's honestly, it's not a mechanical thing. That's the hard part about it. Like the strategy knowledge comes from just years and years of doing this. Um, things like is UB too extended versus the rest of the curve? So if so, I'm going to fade that back into the mean versus the curve, right? How are the yields doing? And in general, are we in a balanced day? So am I going to look to fade anything out of a standard deviation back into the mean? Um, you know, it differs from day to day, but there's not like one specific thing that I look at. So if X and Y, Z happen at the same time, then buy. It's not like that. And to be honest, um, it's never like that for any trader that's done it for a long time. If it was that easy, and you get proficient at doing that when it's extremely mechanical, you can probably code the thing. Do you mean bonds, Anoni, or do you mean the Bund, as in the German 10-year? Eurex product. My general thoughts are, right now that the market is basically sticking the fingers up to the Fed and saying you shouldn't be cutting because the data is really strong. And realistically, the market's always right, not the Fed. The Fed historically get it wrong. So for me, if that seems to be the continual theme, it's been a theme all week. And we are moving into the middle of the month, so we'll see what data comes out. Most likely, there's going to be some profit taking into Christmas, so we'll probably see a bit of a pullback and balance out. And then January, Trump takes over, will be wild. And then we go into February, which is the roll. I'll come into that towards the end. February will be a good month. The roll is always awesome. Yeah, I mean it's better. It's better commission wise. It's €10 a tick. The math is a bit easier to math, whereas US Treasury is a bit wonky. Um, yeah, but definitely the best quality of book and tick to commission ratio, in my opinion, is the 30-year bond, without a shadow of a doubt. This one, ZB 30-year, nice and thick, 31.25 bucks a tick. Trade 2 to 3 contracts at a time. You can make, we'll just call it 93 bucks minus comms for one tick. You do that 20 times a day, and you've made the guts of 1800 minus comms. Which you may be thinking that's a lot, but if you're there for 5 hours and you're scalping 1 and 2 ticks at a time, it's not long in adding up. That's the way that I look at it. But I'm a scalper at heart, not. I don't day trade. If I want to hold positions, I'll buy an S&P ETF personally, which is more of a pension fund. The UK futures trader. How's it going, dude? You seem to be a new name. Nice of you to join us. Good question, Anoni. So a lot of the guys actually in the Discord, they trade more Eurex than me. Um, I've traded US for so long that I'm kind of suited to that schedule now. Because I would need to be at my desk for like 6, 7 a.m. to trade Eurex, which you know it's just a completely different change in schedule. Me personally, the Bund moves too much. If I was to pick a Eurex product, it would be probably the Bobble. The box looks far too thin for my liking. Far, far too thin. It would be the Bobble, and then I'd maybe trade Euro stocks, FESX. But yeah, I couldn't trade the 2 sessions. It would be too much, man. Way too much to endure. Pike, YouTube makes so it's almost just trying to build a community at this point. I mean, you know, despite having a couple of thousand subscribers and so on, it makes like 30 quid a month. I mean, it doesn't even buy you a meal. So, you know, and honestly as well, so even pushing affiliate links and stuff too, um, there's just no money in that either. It's not really a thing, and I'm the worst affiliate marketer and stuff. I'm there to make money from trading, and the objective of this was to build a cool community, and maybe do some coaching and help some people, um, and just charge for my time. We're gonna come up with some new ideas in the next quarter, I would say. Got some interesting things in the works. That reminds me, you guys can probably see the thing scrolling across the top of the screen. Uh, we've managed to negotiate good futures prices and commissions and margins for everyone. Used our community size in order to get better pricing for everyone. So for treasuries, it's 292 a round turn, and 8% margins. So I think off the top of my head, say you were circa $300 to trade one contract to the CB. I think it was about $180 to trade one contract to the 10-year, which is awesome. So yeah, really good starting out the gate starting numbers, to be honest with you. It's actually cheaper than a lifetime license of Tradeovate, believe it or not, and the margins are much better. We're working on something at the minute as well to see if we can get even better things, but I honestly need more people to sign up to that and endorse it, so it gives me more leverage to be able to talk to brokers, because I need some volume and size behind it. I need the community to basically back me on that one, to be honest. I do already, mate. I don't really publish it, to be honest. It's on the Buy Me a Coffee thing, if you want to click on it. Um, it's a bi-weekly call, once every 2 weeks, typically, for an hour at a time. You need to gauge how you're doing, and it's a month-to-month schedule, um, and just really see how you're working on everything. It's a one-on-one session, so that's typically the way I do it. I don't really promote it because I don't charge enough for it, if I'm completely honest with you. I did it more of a start, just as a hobby to pay for my time. But yeah, the value that people get from it is way more than what they are actually paying. I mean, it's 200 quid a month. I really need to look at revising that at some point. Here it's here, mate. I'll pin it for you. And also, we're working on something in the new year for that as well. We're putting something together too. But there's nothing to really beat someone on one. I'm never ever going to put together a course per se. It would be like an intensive training or something along those lines that we would do, or a one-on-one schedule. Um, the reason being is I find I could provide value that way. Giving someone a course of pre-recorded stuff is, yeah, it's going to be quite difficult for them to do anything like that. The skill set that you learn from an experienced trader is asking them questions with things that you're struggling with. Because realistically, we're all doing somewhat the same thing. We're either buying a breakout or fading back into the mean. And it's your experience doing it for years that typically provides you the edge. It's not a specific tool. I mean, granted, you guys look at these charts and think they're mental, but this is what I've used for a long time. The only thing I change now is maybe to try and make my life easier, maybe plot some of the stuff on other charts on it, or I'll maybe add in something for correlations like yields. But this yields thing has been an absolute game changer because it means I don't need to have other charts up on the screen. So it's awesome. It's all in my peripheral, which is great. Man, I'm all about simplicity these days. Exactly, Miranda, and that's the thing. Yeah, everything's on the buy me a coffee thing, mate. There's a setup on there, but Miranda, that's the main thing, mate. Is to really run through and see how you're reading the market. Take a deep dive into your stats. See how your max adverse and max favorable excursions looking. How are you trading for times of the day. It's always good to have a second look at your journaling and just how everything is running. It's very little about the strategy per se, because the strategy needs to suit you. You know what I mean? Same as every trader. It's very much the same as the gym, right? When you go to a personal trainer, the program and diet regime they put you on needs to suit your lifestyle and suit you as a person. If it doesn't, then you're not going to adhere to the program. There's no difference in trading. You need to be able to adhere to it. It needs to suit you as a person. Whether that's the time of day you're trading, how frequently you're trading, the products that you're trading. Are you doing a pre-market card? Are you doing a debrief? Are you recording your sessions? Um, and typically the answer is in the numbers of your journal, and a lot of the time you cannot see the wood for the trees, so it's always good to get a second opinion on things. A lot of the time. And very typically, a lot of the people that have done that in the past, they have went on to 100% improve their stuff. Um, but it's it's an hour of my time for the first month. I like to do it where it's an hour once a week to get you into the flow, and then I like to try and drop it down to an hour every 2 weeks if possible. But it depends how you're doing. And realistically, it's not like a long-term commitment. If you don't find you're getting value, you can just cancel the thing. So that's pretty much it. Yeah, exactly, Pike. You need to basically pick your poison. You either go and break out or mean reversion. You've also noticed sometimes refer to myself in the third person, using phrases like we or you, almost in a therapy session. It's honestly a bit unusual. No, I don't think so. Also, I think when you're training, it's good to speak out loud as well. I think recording your sessions and speaking out loud is probably really helpful because you can actually look back at them and see what you were thinking. Um, but yeah, interestingly enough, with trading, the main part is doing more of your strengths and reducing the parts that you're weaker at, and probably identifying first off the parts that you're weaker at, and making sure that you're not having any blow up days, and whether you can either improve the discipline or implement some software to make sure that doesn't happen. That's the way to do it. But without knowing, without basically spending time with someone, it's impossible. That's why courses where someone's like, "Oh, take this." Like, I'll just name one for example. The Patrick Whelan guy put a course for a couple $100 or something. I mean, that's just an absolute cash grab. You know, there's no danger that's going to make people profitable. You'll have 1 out of 10 that will maybe take a couple of trades that don't really know what they're doing and will say, "Oh, I've won 3 trades in a row. This is dynamite." You know, it's got nothing to do with the strategy. It's to do with the person. And in trading, you're your own worst enemy at times. So it's trying to get it all sorted. 100%, mates. That is most definitely the way to go. You need to do it yourself, and you also need to if the market's doing something, you need to listen to what the market's saying to you. Try not to fight it. And if it's doing things that you don't like, and you don't think it's of an advantage to you to provide you an edge, you don't trade. Yeah, Pike, it's hard to even really do a cash grab, to be honest. And as well, I don't know, selling a course for $100 is just not. It'll be if someone wanted me to improve their trading, then by all means I'm going to help them. It's not selling someone a course to look over 4 or 5 hours of recorded videos to pump out, then it gets leaked in a couple of months is not what I'm looking to do. For more integrity than that. I also want to leave a mark in this industry, you know what I mean? Be a safe space and actually, get away from all this influencer BS where they pump affiliate links and, you know, trade NQ with candlestick charts and speak nonsense, you know? Be pretty blunt there, but that's the way I see it. But anyway, guys, let me know if you've got any last questions. That's all, and we'll look to wrap it. You can look to find me on Discord or whatever if you want to support the channel. Monaco's an awesome place. I've been there before. It's awesome. Monaco at the casino, chilling on a yacht, mate. Even better if the Monaco Grand Prix on. Even better. What But anyway, guys, you take care. Have a great weekend, and we'll catch up on Monday. We'll be on Monday, Wednesday, Friday next week. So you guys enjoy your weekend. Peace, everyone.